Welcome to TradeTheNBA.com. This is John. This report is for the 15th. Well, it was an interesting day Friday. We made matching highs, but also reached all the way down to the ABM yellow before coming right back up. And again, beautiful move for option situations, exactly what we've been expecting, and it's playing out just like that. Of course, over the weekend, we saw the great training video on how not to protect a former president. And will that have much impact on the market? Probably not going to have any impact whatsoever. Um, yeah, there's a lot to be said on that one. That was an interesting situation. But needless to say, we're already opening futures in Europe a little bit higher at this particular time. You can see short activity 2.5 on the NBI white, nothing. We have the dip of steel below, so that could create a little softness within there. But again, once it pops back above the 13, you're going to have that secondary upside run. So bulls continue to be in charge. That doesn't mean that the volatility is going to die off, because again, you have to cover that option activity. From an NQ standpoint, it was a little more muted, and that's just because a lot of the tech has just accelerated at a higher rate, and it's got to fill out. But we took through quite a few positive extremes from the pump, only leaving the initial breakout one. So it's pretty clean as far as we're looking at it from a when you consider people thinking overbought versus not really there. Treasuries again continue to weaken in the yield, which forces money to go where? Nowhere but the market. So, and if the Fed doesn't cut again, so what have these people done? All they've done is shortchange themselves, buying bonds that have a negative yield with the current interest rates. Makes no sense, but they're still doing it. Still haven't figured out who's buying those, because we see foreign governments buying gold, not buying U.S. Treasuries. So it's another one. Oil, of course, continuing to still be elevated. That is going to definitely, as much as the Fed jawbones about, prices, not climbing any longer and real inflation being down. It's not the case. Fine, they're going to compare rents and this and that, but some of that's due to economic weakness. Nothing to do with the fact that inflation is going to abate, at least for normal people. Food and everything, energy, all going to be higher. We look at the euro continues to accelerate for no good reason, and they just need to keep it up at these levels, which is perfect for them. They're back at the peak with this idea that the U.S. is going to cut back to zero rates. Just a little shell game. It's a matter of timing it. And from a gold standpoint, it's going to continue to be a boon for gold, crypto, all of them. I think they're all going to continue to rise, and in significant order, particularly as we move towards the latter part of the year, simply because there's no place for them to go but up, given what we're seeing from the real economic readings. Now, there could be a slowdown situation that could have some, residual abatement to the mediocre, meteoric rise. Took a while to get that one out. From a Bitcoin standpoint, huge jump. And of course, this is going to be an interesting one. I think you'll see this back and forth, because again, it gets back to that Mt. Gox issue and how much supply is being available. But when you see miners in that underwater, they're not selling their coins. So the only people who are going to be available to sell will be these people receiving their bitcoins, and they may choose to wait it out a little bit before doing that. And that means you're going to have a supply crunch, and there's only a limited number of bitcoins. So yeah, kind of tells the story. I mean, it is an interesting relationship situation when it comes to that crypto situation. ETH also having a big boon from that similar situation. We'd already had the buy on these anyway, so it's pretty congruent. From a 50K standpoint, you can see that early morning weakness was bought up immediately, and then boom, skyrocket, and then to the end of the day, just filling back positive extremes, going all the way to right here. And the original breakout was just a little bit lower, down at the 56 range. It's possible that gets filled in which case then you have a complete fill of positive extremes. Everything's congruent. pretty straightforward stuff. I think that everything we're looking at still is consistent with our expectations. You're going to get a bit more of this movement back and forth because they have to take care of the options plays, but overall the bias is still to the upside and will continue to be so. Of course, you're going to have Republican convention coming up, and that isn't going to change the stats on anything, and materially no change. Biden says he's staying in there. Um, Status quo. And from a market standpoint, status quo is up, 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 up. This is what we're looking at in post market right now. The euro from its post cave, you would expect that they're going to try and bring that back up to where things were right before the selling took place on Friday. And if we go back to Friday's action, there you have it. From there, it was the pre-market that was slightly lower, just real quick head fake to clear out any stops, and then straight up from there. It was pretty benign from that point until later in the afternoon, where you had to fill in all of those positive extremes coming through, and they did that beautifully. So, all in all, no objections to any of this stuff. Nothing surprising as far as I'm concerned. Some people may find it a little shocking, but at the end of the day, I think this is all pretty straightforward, and we'll continue to see how things develop on the political front. There would have to be some kind of massive change, and that didn't take place. So, as usual. Anyway, anything relevant, I'll put it in the Skype chat. Have a good one. Trade well.